My name is Jason Derbyshire. I'm the TradeLog Business Development Manager, and I'm going to be hosting here today. We have with us Robert Green, who is the CEO of Green Company and a managing member of Green NFH LLC, as well as Darren Neuschwander, who is also a managing member of Green NFH. We're glad to have them with us today. We also have Johnny Paget, who is an accounting specialist with Green, and he, some of you might know him. You probably have worked with him. He does most of the TradeLog services for any users who need accounting services. So Johnny's with us as well, and we'll talk a little bit later about some of the things that he can offer. We're glad to have these experts with us today as we talk about expert tax strategies and solutions. And we've been working with GreenTraderTax now for over 10 years, I think. It's 2001, I think Bob started working with David Ike, the founder of TradeLog Software, and we've been working together to provide tax solutions for active traders and investors. And this year has been more challenging than ever. I'm sure that Bob and Darren will agree with me on that. Before we get into some of the challenges and such, I do want to make sure and mention a couple of things for everyone to check out, and I'm going to drive this home later. If you go to GreenTraderTax to their website, which is greencompany.com, you definitely want to check out the blog articles that Bob and Darren have been putting together that provide a wealth of information about the challenges that are facing people today. These are some great blog articles that they've posted that have also been published in some other publications as well. So please make sure and check those out. So that'll keep you up to date and informed. But I'm going to go back over to our little presentation here and just highlight for a moment here some of the challenges, and then I want to get Bob and Darren on here and they can talk about this as well. But just a quick overview, some of the challenges we're seeing for 2011. We've got a greater tax burden. Brokers are required to report cost basis now for many securities. Traders, as you're finding out, you're having to fill out new forms, the new form 8949. There's more work involved than ever in filing your trader taxes. And something that Bob has especially pointed on his blog articles, we're dealing with apples and oranges here. A 1099-B form that your broker provides and a form 8949 that you are required to provide, and reconciling the two is almost impossible. Many of you have seen those challenges. And there's a need to be informed. That's greater than ever we're finding this year. You can't file your taxes like you did last year for most of you, so it's very important that you be informed about what is required, the instructions, and make informed decisions when it comes to this. Bob, Darren, why don't you talk a little bit about some of the challenges that you guys are seeing when it comes to especially the 1099-B problems and that topic of apples and oranges. What are you finding when it comes to 1099-B and Form 8949?
Go ahead, Darren.
Well, Jason, thank you for having us on the call today. We appreciate it and are glad to be a part of this presentation. Apples and oranges, yes, that's a very good topic for sure. We are seeing a dramatic difference in the way the 1099s are being reported just among various brokers. There's no standard way that brokers are required to actually report this information, and because of that lack of having a standard form, the brokers are reporting it in various ways, and it's creating a challenge overall for the taxpayer, and also as their paid preparer to prepare the returns properly. In that respect, trying to meet the April 17th deadline is just basically impossible this year because of the differences that we're seeing. I mean, we've got brokers, not singling any particular broker out, but we've got some brokers that are calculating wash sales improperly. We've got some brokers that are putting wash sales in the proceeds as opposed to inside of the cost. We've got some 1099s that are coming out where the actual trading activity is actually doubled, and that you import it inside of TradeLog and it's showing something completely different, and come to find out the 1099s have the activity reported twice. So it's dramatically overstating activity. We've got other brokers that we just can't explain the differences. I've got one that I just was working on before this call, and his TradeLog reconciliation compared to what the broker says is out by $825,000, and we can't explain that. So it's these differences that are causing just a dramatic increase in the need, we feel, for taxpayers to strongly consider filing extensions, because we anticipate the brokers are going to have to issue corrected 1099s this year, Jason.
And is this a matter of brokers just screwing everything up, or really what's the deal with the requirements for 1099 versus 8949 that you've seen?
Well, the brokers are basically given one set of rules, and we're required as the taxpayer to follow another set of rules, hence the reason why the article mentions apples and oranges. The brokers were, for instance, the brokers were only required to calculate wash sales for transactions that took place inside of calendar year 2011. So that means if you actually had some deferred wash sales from 2010 that rolled into 2011, the brokers were not required to calculate that. That's not part of their 1099 reporting. That's not something that they did incorrectly. It's just that the IRS said that they were not required to do that. That's the covered versus uncovered transactions. So if you have that case, you're not going to match what the broker has on the 1099. Your TradeLog information will be, there'll be some adjustments needed for that. And that's not that the broker's doing something incorrect in regards to wash sales. That's just the difference in rules that the IRS gave the brokers compared to what the general taxpayer has to use. Also, brokers have to use what's called identical stocks when they actually compare whether something is subject to a wash sale, where the general public is supposed to use substantially identical, meaning when you calculate a wash sale and then you actually had some options that went along with that position, you got to take that into account for your wash sale calculation. The brokers don't have to do that. So there again, that's another reason why the broker information provided won't necessarily agree to the information that's downloaded in the TradeLog.
And if I can jump in here too.
Go ahead,
Sorry.
Bob.
Thank you, Darren. This is Bob Green. I just wanted to jump in that Darren pointed out the apples and oranges, but the brokers did botch the 1099s on wash sales too. They are reporting in many cases potential wash sales, which are not actual wash sales. And this whole wash sale issue is something that TradeLog has done right, and Dave Ike has insisted on doing right from the beginning. And he pinned us down for 10 years to help him with this. And we're so happy that he has it right, because it's probably the only solution on the market for any trader anywhere with any broker that they can use to report their wash sales correctly. Because the brokers are doing apples and oranges on wash sales, so we know they're wrong, like Darren pointed out, but they're also listing potential wash sales that TradeLog knows better. TradeLog sees that those losses were absorbed with later gains, with subsequent dynamic analysis, which brokers are not doing, and I don't believe brokers can do that. I think they've botched it. And also when you break the chain on a wash sale and don't buy it back within 30 days, there is no wash sale. Brokers are not doing that. TradeLog is doing it right. And lastly, TradeLog is the only solution that we know of that can analyze your wash sales across all accounts, including retirement accounts, if you include them to the analysis. So if you want to report wash sales properly, use TradeLog. If you use your own worksheets, you can't tell wash sale analysis unless you know you break the chain for 30 days. And this is, I think, the biggest problem with the 1099s, and there are many others. Just to add to what Darren said, the new rules say start with the forest, and TradeLog downloads all the trees, and it adds up to the forest, and it's good. But the brokers were told to start identifying all these different quirky types of things, covered, non-covered, reported, non-reported. Some ETFs are in, some publicly traded ones are out. They marked all these trees with different legends, and when you go to count up the trees, it never adds up. They've done something to break down and re-aggregate the information without using accounting rules. They've netted proceeds against cost basis, as Darren pointed out, and vice versa. They've broken every rule in the book. They had software people rushing to deal with a Form 8949 that they never saw. The IRS was late. So, Jason, I think we've covered this issue of why there's apples and oranges and errors. And Darren pointed out, we're not signing tax returns now. We don't want to file a Form 8949 with a lot of differences. We want the brokers to get these 1099s corrected, and we want the IRS to provide some relief. And that's why we have a petition out yesterday as well. So maybe you want to continue now, Jason, with the presentation.
Yeah, appreciate Bob and Darren for that insight on that, because that really helps us see some of the challenges. And, you know, when I talk about being informed here, this is something I know talking with our support department that's important, because a lot of times individuals, they're pulling out TradeLog. Maybe you've used TradeLog for years, and you're used to what you could do in the past, generate a quick report, and you're ready to go. But this year, you need to understand what's being reported. And I want to point out a few things. On our website at TradeLogSoftware.com, under tax topics, we have a topic on Form 8949. Here we explain how this new form is laid out. We also talk about these categories. Like Bob mentioned, we've got these terms now: covered, non-covered, reported, not reported. And a lot of people are confused. Well, what does all this mean? So we've explained what these categories are, what it means if a security is covered or not covered, as well as what the IRS has defined what these covered securities should be. And we also talk about some of the challenges with reconciling a Form 8949 with a broker 1099B. Now, I've seen a couple of questions already come through from folks about known problems with 1099B. So I'll highlight as well, we have a tax topic on 1099B reporting problems. And there we talk about, again, some of the challenges reconciling the 1099B with 8949, but especially what we've been doing is compiling some of the challenges as well as solutions based on broker. We have various brokers that are listed here, 1099s that we've seen, known challenges that might come up, issues. Sometimes it's something that might be inexplainable as to why the broker did it. Like Darren mentioned, sometimes it's just a fact that the broker was required to report one way, but your 8949 needs to be a different way. So we've listed here that information. So if you're looking to find out, well, what might be incorrect on your 1099B or what you need to be aware of, this is the page to go to. And if you don't see your broker listed, one of the things we've offered to TradeLog users, if you send your 1099B in along with your TradeLog file and it's not reconciling, we can examine that and try to help understand why there's a difference, and then we can put that information out there for others as well. And of course, as we mentioned, Bob and Darren have some great articles on their blog as well that discuss a little bit of the background, why we have these issues, why there's the differences. So if you haven't checked this information out, please do so, because that's going to help you be informed. But I want to take a few minutes right now to talk about the TradeLog solution and TradeLog's approach to this. This is important because many TradeLog users don't quite understand how TradeLog is generating the 8949. What we found is that you cannot use 1099B data alone for generating Form 8949. Even though the IRS may say, well, take your 1099 and use that to fill out 8949. That sounded great on paper. But reality is it doesn't work. There's stuff that's not being reported on the 1099-B, such as your options that you have to account for. As Darren mentioned and Bob mentioned, wash sales are all over the place. So the basic rules we find for calculating capital gains and losses, those haven't changed much. And we've been doing that. Like Bob mentioned, TradeLog's been doing this for over 10 years. So TradeLog's approach in version 9 is we take that gain and loss reporting that's based on your actual trade history, and we format that and report it in Form 8949. And we also provide some key reconciliation and adjustments with Form 8949. That way you can actually reconcile your trade log history and be able to understand where there might be some differences. For example, I'll show here in TradeLog just briefly.
Jason,
go ahead, Bob.
Can I just jump in for 1 second, Jason?
Definitely.
I'm hoping today we can talk about that reconciliation difference, and you can show it because you have it now, and it's very large for some people, and they know their trading gain and loss is right and their tax return is right, but they have a large difference on the 8949, and we want them to file an extension because we want to narrow that difference, and we're not even sure we want to file with that line item like that. We've had a continued discussion in-house here between Darren and myself on this issue. So when you're ready for that, let's discuss that too.
Great, yeah. And that's what I want to show here is when we generate the Form 8949, sometimes what TradeLog does is it creates this adjustment, and that's what Bob is talking about. On Part A is the only part we're concerned about where we do this, and this is an adjustment to reconcile the difference with your 1099-B. And what we're doing is taking the cost basis information that your broker reported to the IRS, and we're comparing that with TradeLog, and we're creating a difference. So here on this sample file I have, it's about $111 difference. Basically what that means is what TradeLog is reporting for cost basis is $111 off of what the broker reported. So now what Bob was mentioning on the last page of our Form 8949, we give some information here, and it's additional information regarding this form, and we explain this issue with this adjustment line. And one of the things that's important on here is we make mention that if that adjustment is large, then you need to be able to understand and explain why there is that adjustment. And again, this is where it's important to be an informed taxpayer, to understand, not just run the report and send it off, but look over that report, understand the differences. And if there is a large difference, as Bob explained, that's where we want to maybe pause and say, well, why is this happening? And either provide additional information or file an extension and give some time. Bob, can you talk a little bit more about that? What people need to consider if there is a large adjustment on there?
Well, let my partner Darren, who's head of tax preparation at Green NFH, he's the big boss there. He looks at all these files, and he's seeing differences all over the map, and we just feel that why file early with that difference highlighted on Form 8949. It's not an actual transaction, it's a plug number comparing it to a 1099. There's a lot of good reason why there are differences. Besides the apples and oranges, besides the botched errors, remember that they're only reporting part of the picture, not all of it. So in prior years, we always used to reconcile with the 1099 proceeds, and TradeLog did that very nicely. Johnny Padgett always tied it out to the penny, and he'll jump in here as well in a minute. So we always felt if the proceeds were the same as the 1099 or higher. Why higher? Option sales were not on the 1099. Well, this year we are assuming the IRS is going to match these forms to the 1099, the 8949, and send tax notices. They're not going to try to reconcile things to the penny. That should not be the goal, for the same reason you couldn't reconcile proceeds because of option sales. So I think they want to just make sure things are in the ballpark. But needless to say, if the differences are so large, it gives us cause for concern, as you pointed out, Jason. So Darren, why don't you talk about that, and then Johnny.
The actual reconciliation that TradeLog does, what it's trying to do is basically make the 8949 in total, as far as the proceeds and the cost basis, make that tie back to what the broker put on the 1099-B. And the reason that was suggested is so that when you actually do file your tax returns go through this matching process with the IRS computers, to where they actually take the data that's on W-2s and 1099s, etc., and see if that matches in general to what you have on your tax return. So the reason is to try to avoid the potential what's called an IRS CP 2000 computer notice because of matching issues. The problem and the concern that we have with that is some of these plug figures to try to make it reconcile back to the 1099-B are very large. And John Pageant, which is on the call, can comment further on that, but they're so large that we have major concerns about reporting it just to try to reconcile back. And the fact that you're putting a number on that you really are having a difficult time actually explaining really concerns me, because if I'm your paid preparer, I have to sign the tax return basically as well as you do. So both of us have something on the line for filing a tax return. So I want to feel comfortable that all the numbers that we're putting on the tax return I can reasonably support. And with such large adjustments that we're seeing, I have concerns about that, and hence the reason why we're suggesting extensions, because we honestly feel that the brokers are really in need of correcting the 1099s that were previously issued this summer to try to reconcile some of this, or we're going to have to get relief from the IRS for the matching issue. John, won't you comment on some of the reconciliation issues that you've seen?
Yeah, just to give people an idea of some of the range of the problems that Darren's talking about, depending on the size of the client and the activity, the trading activity, obviously that will vary. But just to give you a range, some of the things that I've seen on some of the larger clients with a lot of trading activity, where they're trading $900 million worth of activity trading, they're still getting an adjustment of $12 million in this particular case. Well, obviously, Darren doesn't feel comfortable signing a return with a $12 million adjustment, even though we, in this particular case, have been able to verify that the TradeLog numbers are correct. And we feel pretty good that they're correct at this point, but there's just some adjustments primarily due to some of the things that Bob was talking about, with showing potential wash sales instead of actual wash sales, causing some differences, and therefore causing some the 1099 has adjusted for those potential wash sales on their gross proceeds, et cetera, which was incorrect. And so that's why we're having some of those adjustments. On a smaller client that has maybe a $50,000 trading account, but then throughout the year they're trading several $1 million worth of trades, we've had $500,000 worth of an adjustment. Some of them are $50,000. So the numbers are much larger than we feel comfortable with at this point.
That's some excellent comments on that, and that's what we want to help those of you with us who are TradeLog users to understand is, if you're seeing a large difference here on the adjustment line, you need to be able to understand it. And if you don't understand it, don't just file your taxes, especially if that's a large difference. Now we have a good number of users who have been able to run their 8949s. They get very little difference, or everything is reconcilable. They understand exactly what it is. They're able to file. That's great. But what happens if you're having those large differences? You need help. One of the things I want to point out at this time, especially we just heard from Johnny, we have options available for people who need professional help in these complex situations. If you call TradeLog support, we provide technical support. We don't provide trade accounting services, so we can't sit and go through your account and understand all the differences. But we have partners such as our friends here at Green who provide this help. Johnny especially, I know, does that day in and day out, using TradeLog for active traders, helping them to be able to understand what's going on. So for those of you who are having those types of situations or those problems, that's something that you might want to look into. And you can contact Green directly. You can contact our support department. We can refer you over, get you the contact information for the folks there at Green. But you definitely want to make sure that you understand that large difference. And that takes us to our next topic I want to kind of discuss as well, and that's extensions. And both Bob and Darren and Johnny talked about this. This year, extensions are likely necessary for a lot of people. Let's talk about if someone wants to file an extension, what are some things that our clients here need to be aware of when it comes to filing an extension? Just file an extension and put this off until September, October? What do they need to be doing? You guys want to comment on that?
Go ahead, Darren.
Well, Jason, the extension, and this is very key, the extension is an extension to file your tax returns. It's not an extension to pay. So what that means is if you have a tax liability that is due with the actual filing of your 2011 tax return, you still have to pay that, at least pay 90% of it by April 17th. So even though you're having some of these reconciliation problems, you still need TradeLog now. There's no way that you can put off purchasing TradeLog and getting the data. The reconciliation problems need to be worked out during the summer months. You get a 6-month extension, but you still have to have some reasonable information, reasonable gain and loss calculations to determine whether you're in a payment situation or if you're in a refund situation. If you're in a refund situation, then you basically file an extension. It's a 4868 for an individual return for the IRS, and you have to look at your own individual state to see if you need to file an additional extension with the state. Some states automatically accept the federal extension and other states don't. New York is one where you have to file a separate extension, so you have to be very careful of that. But if you're in a payment situation, you need to make a good faith estimate of your calculations and actually pay that amount in, at least pay 90% of it in order to have a valid extension. You at least have to pay 90% of it in. If you can pay the 100, pay the entire 100 so you're not subject to any type of late interest payments or anything. But at that point, you file it. The extension is a 6-month extension, so you have until October 15th to actually file the return. The other thing to keep in mind, since we're working directly with TradeLog, and TradeLog does an excellent job with mark-to-market accounting, is keeping in mind if you're an active trader and you have not elected mark-to-market accounting, code section 475F. If you want to do that for tax year 2012, which is the year that we're in right now, you have to make that election by April 17th of 2012 also, and that has to be sent in with this 2011 extension. So you still have some work ahead of you. If you haven't filed your extension already, you need to do some calculations, and if you're an active trader or just anyone using TradeLog, you've got to get the TradeLog software and you've got to get your data in there so we can see where you stand.
And great, Darren, and Bob Green again here. You have to deal with the big picture before April 17th. Don't sweat the details. Like the reconciliations, they're really important, but you're reconciling to botched 1099s. TradeLog is going to give you the correct numbers, and you're going to know whether you owe money or not. You can estimate your expenses. You can deal with trader tax status, but you can't put off using TradeLog. This mark-to-market election, Section 475, is very important. It's the reason why TradeLog and GreenTraderTax came together in the first place. I asked Dave Ike to build that into the software, not just the wash sales, but if you want to be exempt from wash sales, you elect Section 475 and you mark positions to market at year end. If you're a day trader, that doesn't matter. You don't have open positions anyway. And you don't have to apply mark-to-market to your segregated investment positions, and you don't apply it to your futures, so you keep your lower 60/40 tax rates. But you have a big decision to make by this April 17th whether you should elect mark-to-market or not. And many people sign up for a consultation with me, and that's why my schedule is open. I don't do tax prep, so I can do the consultations and Darren runs tax prep. So I'm going to say to you, what does your trade log show for 2011? And I'm also going to say to you, what does it show for 2012 year to date? And you're going to say, well, Bob, you know, at the end of 2011, I have a big wash sale amount. That might be good, because if we elect mark-to-market accounting by April 17th, that converts in TradeLog to an ordinary loss. So I might have you actually use TradeLog to open up the 012 file, switch on mark-to-market accounting, and ask you what that shows, or Johnny Padgett can work with it. The only way we can really make the right decision in many cases for April 17th on mark-to-market accounting elections is to have the information available to us from TradeLog. The botched wash sales from the brokers are worthless to us. That means nothing. We need the correct information on wash sales from TradeLog. So if you have a large capital loss carryover from 2011 going into 2012, you want capital gains to use it up. If you elect Section 475 mark-to-market, that will be ordinary gains, which cannot be offset with capital loss carryovers. So you're in a predicament. You want capital gains to use up capital loss carryovers, and you would rather have mark-to-market business ordinary loss treatment instead of additional capital losses to dig a bigger hole. I always say you need a capital gains ladder to climb out of the capital loss carryover hole, and you need a mark-to-market accounting election not to dig a bigger hole. So it's a tricky decision. If you have a large Q1 loss in 2012, the TradeLog shows, and it picked up some wash sales from last year and some unrealized losses on business positions, it converted it on a 481A adjustment, you can't get that in any other software where it's done correctly, because you got to do the wash sales correctly and you have to do the mark-to-market conversion correctly. No one else does that except TradeLog. And that's the biggest decision that traders make that affects their taxes. It's all about not getting stuck with losses you can't deduct. So we might say, well, the Q1 loss is $20,000. But the 481A adjustment from last year is another 20. That's 40. Let's lock that in as a business loss to get back, 20%, 40% of that on your taxes, $16,000 back. $16,000 in your pocket for making that decision. And then we'll say, well, we want capital gains going forward. How do we get that, Bob? And the answer is, with a new entity, which you probably need with trader tax status anyway. And then you can start that entity with capital gains treatment to use up your capital loss carryovers. So this is a little confusing, and I'm kind of rushed it in here. This is in Green's 2012 Trader Tax Guide. It's on the entities page of our website. This is the goal. This is the important strategy, and you need TradeLog to make the right decisions. This is what you should be focusing on today, next week, not dealing with botched 1099. So commit in your mind to the extension and focus on the money issues, these election issues. And that's what Darren's doing day in and day out with our clients now. Johnny Padgett's working hard because, as Darren pointed out, you can't punt on TradeLog work. You need that now for the money decisions. We'll fill in the details. We'll get botched 1099s hopefully cleared up later on. And please sign our petition. A lot of people signed it. It's really hot right now. Just click on our blog. The petition's there. You'll send a letter to your congressman, and we'll get relief from the IRS. This should not be laid off on you, the taxpayer. It's unfair. Thanks so much to TradeLog that they're there, because otherwise people would be completely lost. Back to you, Jason.
Thanks, Bob.
Hey, if I may interject.
Go ahead, Johnny.
This is Johnny. Yeah, I just wanted to point out, too, that TradeLog, of course, does a great job of once you get the correct data in to the program to manipulate those numbers and get the correct output. But there are adjustments that generally need to be made even in the past and continuing forward this year for mergers, acquisitions, splits, different things like that, or missing trades, duplicate trades, that kind of stuff that are common things that have to be adjusted. And that's something that, bad data in, bad data out. The TradeLog can't do anything out. You have to make some manually adjustments there. So be careful of that, and I would urge people to, if you don't have time, then that's one of the dangers of not being able to fully reconcile your TradeLog accounting with the 1099, to know that you've corrected all those things that you can correct, and they can have significant impact on your results. So I would suggest to people that you do a reasonableness check. You know about what you made or lost. TradeLog generally will help you with your getting those numbers more accurate, and also, identifying potential wash sales correctly. So it'll tell you if you've got a real big wash sale issue, then that will certainly trigger that you need to get more fine-tuned as you can on your TradeLog numbers before you file your extension. But I would say if you can't complete the TradeLog where you feel completely comfortable with it, you definitely need to be doing a reasonableness check. How much did I make or lose? Is this reasonable what TradeLog is showing? Because there may be some bad data that you haven't discovered yet without being able to fully reconcile.
That's why, Johnny, a lot of our clients use TradeLog on their own. It comes with great free product support. But our CPAs look at that file very closely. And a lot of clients also want you to look at it, Johnny, because you really need to look it over and ask those types of questions about corporate actions and more.
Excellent. Thanks, guys.
Back to you, Jason.
And as you can see, especially on this topic of MTM, one of the things I put up here on this little slide, some people get confused. They don't understand. They think, well, I can just buy TradeLog MTM and I can start filing MTM. As Bob mentioned, it doesn't work that way. You need to qualify, and you really need to consult. Like Bob just gave us a brief rundown of some of the options there and when it can be good. And I want to kind of focus on that. If I take you over to the GreenTraderTax website, this is a place to go where you can really learn more about whether mark-to-market is good for you. You can learn about how these elections are made, and of course set up that consultation with Bob, because that's important. We have seen some of you TradeLog users who probably qualify for MTM, but you just never looked at it, and it's something that you really should take serious, because it can keep you from, number one, having to worry about Form 8949, but two, it can save you some money if done right. So definitely check out that information. And building on what Bob was talking about there, and Johnny as well, don't underestimate the value of an expert CPA. A lot of people now, they are filing their own taxes. We've got software out there like TurboTax and TaxAct, and that's great for the average American. But for those of you who are active traders, serious traders, expert CPA can really save you not only time but money as well. And that's something that our folks here at Green, they're experts at this. They can take a look at your file, like Johnny said. They can see what's going on. They can help you make decisions about strategies, and so that's why we work with GreenTraderTax to help provide that reporting that then they can use to help you in the big picture. You guys have any other comments about that and how you're able to help people?
Jason, I wanted to say something about the last slide that you had.
Oh,
maybe
sure.
Bring that back up. Some of the brokers offer their clients a Form 4797 for Section 475 mark-to-market business traders. And we have a problem with that. And this actually speaks to the issue of 1099B rules. 1099B rules require the default investor, the plain vanilla one investor. 1099B rules do not account for tax treatment. If you read the new cost basis legislation, it says do not rely on them for your tax returns. We ran into this with some Forex issues. it is inappropriate for a brokerage firm to give a client a Form 4797 because the broker does not know if that client qualifies for trader tax status. They don't know if the client elected 475 on time. We've had some clients come to us. We said, you didn't elect it. You don't even qualify. Most do, but unfortunately some don't. And then they say, well, I told Schwab or I told another broker that I am a mark-to-market trader, and they gave me that form. That's really asking for trouble. So even if you're a 475 trader now, many of our clients are, we've advocated mark-to-market for years to get ordinary loss treatment. It's tax loss insurance. There's no $3,000 capital loss limitation. You're exempt from wash sale deferrals. That's a great thing for getting big refunds with net operating loss carrybacks. So you get a 1099-B just like any other investor. It doesn't mark-to-market your positions at year-end on the 1099-B. It doesn't report the way you're going to report. As a matter of fact, you just fill out Form 4797 and you don't need to deal with Form 8949 at all. So this is a very good example of 1099-Bs being written for the everyman with plain vanilla tax treatment, yet taxpayers having different status, different elections, different facts and circumstances. And that's what's so good about TradeLog is TradeLog is on your computer. It's not on a server. TradeLog asks you, what is your status? Do you want to treat ETF options as Section 1256, the way that we say many can be? What's covered, what's not covered for the 8949? TradeLog has been working with GreenTraderTax for 10 years to provide the bridge between the broker and the tax return. These new 1099-Bs and these new cost basis rules are breaking that bridge, but we're not going to let them. So that's the whole idea here is you, the taxpayer, need to be in control of all this. It's not going to come from the broker. Darren, did you want to say anything else?
No, I think you summarized it very well, Bob. Thanks.
Back to you, Jason.
Thanks, guys. So it kind of brings us to the end. Of course, we have a lot of questions here we want to discuss. Now, I want to mention a few things again. We have our blog at blog.tradelogsoftware.com, and we're going to be posting up some links over to Bob Green's blog as well. And once we're done with this session, Bob mentioned several times about the petition. And the GreenTraderTax Traders Association has put together a wonderful tool online where you can petition Congress to give us some relief here when it comes to these cost basis reporting rules. So I'm going to be sending out this link to everyone who joined us today, as well as to all of our other users who couldn't join us, because this is important. And maybe, Darren, you could talk about a little bit what the industry is trying to do to get relief. What's our goal? What do we want for relief this year?
Well, it gets back to what I was mentioning earlier in the presentation, the issue with matching the information that's on the 1099-B to the information that ultimately will be on your own individual tax return. And we're basically asking the IRS for some relief when it comes to the overall matching, in that we don't want to be bombarded with hundreds of thousands of CP 2000 computer notices because the information is not matching up. So we're trying to be ahead of the game. Well, another reason why we're recommending clients and just the general individual that has any 8949 issues, file an extension, and let's see if the IRS will grant us relief for that. They have granted relief before on a similar issue. There was a 1099-K that was supposed to be issued. Well, it actually is issued, but was going to all individuals and companies that actually received credit card information. And the retail industry was very concerned that it was going to create a matching issue with overall income for the businesses, and the IRS identified that, agreed, and basically backed up and said, they are not going to match the information that's on the 1099-K on these tax returns now and for the foreseeable future. So they have granted such relief, but in order to get such relief granted, that retail industry had to actually go before the IRS and identify the problem, show the issues it was creating, and at that time the IRS backed up and granted the relief. Hence the reason why for the petition we're doing the exact same thing and hope we get similar results.
And unfortunately, Darren, we don't know if the brokers are going to help us because they're not fessing up to this. They're not even answering some of the calls from the reporters that we're working with. And people will see us in all the major media, Barron's, Wall Street Journal, Forbes, and there's more coming out. But the brokers are not fessing up. And TradeLog has tried so hard for so long to cooperate and work with the brokers, but brokers just seem to clam up when it comes to tax information. They don't want to touch it with a 10-foot pole. They could have had the unified election this past year to include everything historically, but they don't know what taxpayers elected again, whether it was FIFO or special identification, tax lot accounting. Brokers don't want any part of this. If you want special identification, you need to tell the broker in advance, and they have to note it in their books and records contemporaneously. So we need brokers to help us, but I don't think they are going to fess up. So we have to do this on a grassroots level. TradersAdvocacy.org is about raising an army of traders to send letters to Congress to get change. It's not about buying high-priced lobbyists for special influence in Washington, D.C. We have to do this on a grassroots basis.
Excellent, great.
And Jason, how's it going with you and working with the brokers on this? Are they getting back to you about some of these known issues? Because you have them posted on your website.
Yeah, that's a great point, and I actually was just looking at a few questions where some users were asking, how do we convince the broker of the problems? And we see some varying degrees. A few of the brokers we are working with, the departments that actually handle the 1099-B reporting, some of them are aware of some of the challenges. You know, an interesting point that one of the broker executives mentioned was that, you know, they were put in an awkward position because they've been working for several years to prepare for this new 1099-B reporting, and then the IRS decided to throw in Form 8949 sort of at the last minute last year. And so had they known what the IRS was going to expect now on 8949, they may have had time to improve their 1099-B even more. But again, this is something where they're trying to do a back office solution to deal with, you know, hundreds of thousands of accounts, and it takes a lot of time and a lot of money for them to do it. So some are trying to respond to these concerns. It's interesting that the brokers themselves, the financial industry, has also been lobbying the IRS to postpone some of the requirements that are going to go into effect in 2013 because they're seeing the problems that are happening this year, and they're telling the IRS, look, we can't do this because next year they're supposed to start keeping track of options and the wash sales on options, and they just know that they're not going to be able to do it well. So we hope that the industry continues to cooperate, you know, with those of us who are dealing with the taxpayers and the actual Form 8949. The more we work together, the more we work with the federal government on this, hopefully we can get some changes. But it's going to have to start, like you said, Bob, at a grassroots level.
Right. I think brokers, it will be impressed with the grassroots level. And Darren was the first one, and he's involved with one of the leading accounting groups. And Darren pointed out, let's not blame the brokers here. They follow the 1099-B rules, which said they're not supposed to be relied on for taxes. Some of this is very poor design, a laudable goal to close the gap, but now we have a broken compliance because it's just not working. So it's not the broker's fault. And Darren, you explained this very well about the timing when the 1099s come out and how the brokers are so rushed. Why don't you explain that?
Well, this is just going to be an ongoing problem from here forward, basically, for anybody that is an active trader and potentially has wash sale issues. The brokers, granted this year they were given additional time. They were given till March 15th, some all the way up to April 15th. But going forward, the goal is basically for brokers to try to get back on their regular cycle of getting the information out to clients by January. But the problem with that is if you actually have any transactions that you close out in January and you potentially buy them back in January of the following year, well, the broker is going to have to take into account all of your January transactions, January of the following year, to actually see whether you actually have some wash sale transactions. The brokers are going to start working on calculating and issuing the 1099s. They want to get it out by mid-January. If they're trying to get it out by mid-January and the wash sales can't be thoroughly calculated till the end of January, how will the 1099s potentially ever be correct for calculating wash sales? They won't. So what's going to happen is if we get back on this trend of getting the 1099s issued around the end of January, if you've got any wash sale transactions, the brokers have already said they'll issue you a corrected 1099 at a later point. I have real concerns about that because what's going to happen is someone's actually going to file their tax return using that initial 1099 that came out that's got losses that are potentially overstated because of deferred wash sales, and then later they have to file an amended tax return because a corrected 1099 came out. That creates an overall administrative burden, and there's got to be some type of resolution to this, and that's what we're trying to work with this society that I'm associated with, and we'll try to explain to the IRS the overall issues. I mean, you're basically asking the broker to calculate wash sales, but at the same time, you still want them to issue 1099s at the respective dates so everyone can file their tax returns by April 15th of each year. It just creates an administrative burden because if you give the brokers till March 15th every year to issue 1099s, that's asking a lot for CPAs and just the general public to basically file your tax return in 1 month. It's very burdensome, and we've got to reach some kind of resolution to it, but it's going to take time. It's going to take a grassroots, basically rise up of what we're trying to do with this petition to actually address it before the IRS.
And, I want to point something else. Thanks, Darren. TradeLog is software for you, the taxpayer. It's all about you, your gains and losses, your tax return. It's built to help GreenTraderTax. That's why Dave Ike and I worked on it together like that for 10 years. TradeLog had been more portfolio, and I said, Dave, make it a tax program for our firm so that we can do tax returns. We had a co-branded product at the time, GTT TradeLog. Now, you'll hear about other programs, but what's important to know is that most other solutions are enterprise solutions for the broker. They work for the brokerage firm. Those programs are generating reports for 1099B rules. We just said they're apples and oranges. So I don't want to name names right now, but when you read in the newspaper about some supposed competitors of TradeLog, they're not competitors because those are enterprise programs. And if you speak to the owners of those companies, they'll say, you can't use our results, use TradeLog. I have that on our blog. So that's what's so great is that TradeLog has been independent, focused on the taxpayer, whereas most of the industry is focused on the broker. Back to you, Jason.
Guys, some questions that I'll throw out there. We're getting some questions from people. What are the benefits of doing MTM? Is MTM, if you're an MTM trader, is that affected by any of these new rules? What would you say are the benefits of doing that?
Well, if you're a Section 475 trader for 2011 and you qualify for trader tax status so you can use it, you don't have to file an 8949. Your trades go on Form 4797. TradeLog gives you those statements, those attachments, and we can file on time, and it's pretty simple. And there won't be the matching to the 8949. We still think you're going to get a corrected 1099 prepared for the everyman, and you probably should still file an extension. And the biggest benefit, this is our claim to fame at GreenTraderTax. They expanded 475 for business traders in 1997. Congress recognized online traders at that point. It had only been available to dealers who have customers. It became open to traders in securities or traders in futures. We only advocated for securities. We want you to keep those lower 60-40 rates on futures, which you would otherwise lose with a 475 election. But this was, go back to the go-go 90s. Everybody was making a fortune. And I just knew that the correction was coming and people would get big losses all of a sudden and stuck with a capital loss carryover. People took money out of retirement plans, had to pay taxes, lost it in the markets, and couldn't deduct the losses and had to pay taxes on their retirement income they took out early. It was really a bad situation. So I was the first one out there educating traders about these elections, and they're free to make. It's free tax loss insurance. If your trading house burns down, you're going to get a big check from the government. Now, if you have a carryback, an NOL carryback, those are very tricky. Don't try those on your own. You really need to go to Darren for those, and Darren can explain about carryback returns right after I finish. So, again, most accountants will tell you when you ask them about it, first of all, they don't really know. So they want to dismiss it because they're not that educated about it. And if they know anything, they usually know only half of it. So they say, oh, don't elect it because then you can't have long-term capital gains on your investments. That's very wrong. You can segregate your investments. Or they say, don't do it because you'll lose 60-40 on futures. Wrong. You can elect it on securities only. Or they say, don't do it, you'll lose your old capital loss carryovers. Wrong. You never lose those, and we give you other ways to use those up. And we give you ways to make the election at the right time. So in most cases, almost all cases, it can be a great election, but you can't just make a blanket decision. You should consult us about it. And Darren, the big money on those NOL returns, we filed them for millions of dollars when people have big losses. And any tips on those, Darren?
Yeah, before I get to the NOL carrybacks, I mean, let's just continue on a mark-to-market why you would want it. I mean, we've talked all through this presentation about wash sales. If you elect mark-to-market accounting, you don't have to keep up with wash sales anymore. That's part of the election process. You're not subject to the wash sale rules. So that's one less thing you got to worry about calculating. Now, Bob talked about mark-to-market and what is it? It really is trader insurance. If you're profitable as a trader, and as a trader you should be trading short-term. So if you've got short-term capital gains and you got ordinary gains as a mark-to-market trader, you're taxed at the exact same tax rate. Short-term capital gains are taxed at whatever tax bracket you fall into. Same thing with ordinary gains. So whether you do or you don't have mark-to-market, if you're profitable, you're basically going to pay the same amount of tax. Where it really kicks in, and hence the reason why we call it trader insurance, is where you have an unfortunate year and you lose money. You lose $50,000 for an example in a given year. If you have cash basis, meaning you did not elect mark-to-market, you've got a $50,000 capital loss. Assuming no other capital gains for the year, you're only able to claim $3,000 of that $50,000 loss in the current year. The other $47,000 is carried forward to future years to offset future capital gains. However, if you qualified as a trader, properly elected mark-to-market, and had a $50,000 loss, that loss is fully deductible on the year that you incurred the loss. And if that loss in itself exceeds all of your other sources of income in the current year, then it can create what we call a net operating loss. And with a net operating loss, you can actually carry that back to the 2 previous tax years and actually request a refund of taxes that you paid in those previous years. I get this question all the time. Well, I wasn't a trader in the previous 2 years. It's irrelevant. Makes no difference. If you have a net operating loss, you can carry that loss back to the 2 previous tax years. Even if you just had W-2 compensation, you carry the loss back, offset that loss against your W-2 compensation, and you get a refund. Now that actual refund preparation process can be done on 2 separate forms, a 1045 or a 1040X. Preferably we do it on a 1045. The 1045 gives you 90 days for the IRS to basically respond back to you and issue the refund. Now, the actual 1045 form itself is only 4 pages long, so most people think, well, I can just prepare this myself. I caution you on that, because you're actually going back, you're requesting a refund from the IRS. You want to make sure that you don't open yourself up to any other types of questions. We've been preparing 1045 for many years. We've worked directly with the IRS. We know exactly what they want to be part of that 1045. The 1045 form is only 4 pages, but when we actually prepare one, it can be several hundred pages in thickness because of the fact that we know what supporting documentation the IRS wants and needs to properly process that 1045. So I caution you on that. If you have a net operating loss, you need to have a consultation with us and see about having us prepare that tax return for you, because otherwise you don't want to botch it, because that opens yourself up for other questions from the IRS, and you don't want to delay your refund either. Back to you, Jason.
Guys, you know, continuing with MTM, but a little bit different approach. A couple of people have asked, you know, some scenarios. We know once you elect mark-to-market, you know, that is your method until you change that election with the IRS. A couple of people have mentioned either they weren't able to trade for the last several months of the year. Maybe they lost a lot of money. How could their trading activity impact whether they can continue with mark-to-market accounting? Is there anything that people need to be concerned about if they've already made that election but they've had a major change in their activity?
Well, you know, 2 things are required for mark-to-market accounting. 1, that you have trader tax status, and 2, that you have a valid election in place. Once you elect it, you keep it. But if you fail trader tax status at any point during the year, let's say that you trade very actively for Q1 and Q2, and then you take the summer off and you don't resume trading that year, you retool. You know, you're going to learn futures. Well, you exited or suspended your trading business on June 30th. So as of that date, you need to tell TradeLog, apply 475 mark-to-market through June 30th, cut off the file, start a new file going back to the cash method for July 1st. So you're marking to market on the date you exited or suspended your trading business. Now your mark-to-market accounting election is suspended. We put a lot of work into this as the leading 475 firm, and Darren's worked with some of the IRS officials in Washington who collect these Form 3115s, which you must file, by the way, to perfect your election. You elect it this April 17th, and then you perfect the election with a Form 3115. If you elected it for 011 by April 15th, you need to file a Form 3115 this year. We have it in our examples guides that Darren puts together, the examples guides with all the great footnotes. So again, you have mark-to-market. You are a business trader. You suspend your business trading. Your mark-to-market is suspended. You can't use it. Here's the problem. You stopped last June. You marked everything to market, fine. You had some losses. You got the business benefit. Then you traded a little bit for Q3 and Q4, and you generated some capital losses. They're not marked to market. They're capital losses. Now you resume business trading on January 1st. Guess what? You have to resume your mark to market because it's suspended. And if you have gains, it won't use up your capital loss that you generated in Q3 and Q4. So it can get a little nuanced. Darren, did you want to expand on that?
Yeah, you're exactly right, Bob, and that's part of the reason why we feel that everybody's facts and circumstances are different. But if you have some concerns that you're an active trader, you're not sure whether you're going to be able to continue trading like this, it may be the appropriate time to actually have a consultation with Bob. That way you can set up an entity, trade with inside the entity. And if the entity, basically you stop trading and you drop back to being an investor, you can shut the entity down, and the mark-to-market election basically dies with the dissolution of that entity. And being that the trading was done all inside the entity, that does not affect you individually from continuing to be able to have capital gain and loss treatment on your own individual returns. So, we don't necessarily push entities unless there's a reason for it. But in some circumstances, there's a very valid reason for having one. So if you're getting into trading, more active trading, I would highly suggest that you have a consultation with Bob and see whether it makes sense to start out trading inside of an entity.
And it's nice, there's no 8949 in the entity either, if you have the cash method.
Very true.
But Darren, a lot, this mark-to-market's very technical, and people botch the elections. They do it wrong, and the IRS bounces it. And as you found out when you spoke to them in Washington, they wanted the perjury statement on the 3115. Tell us about that, Darren, because some people may try to cheat on the election.
Yes. To make the mark-to-market election, to make it by 2011, you had to have made it by April 15th of 2011. I think it was actually 18th last year because of the delay. But anyway, you would send in the mark-to-market election. The problem is the IRS doesn't necessarily appropriately keep record of that election for the actual processing office of the 475 election department of the IRS in Washington, D.C. So in order to basically perfect your mark-to-market election when you file the 3115, the individuals that I've been working with in D.C. that work specifically with 475F have requested that the taxpayer actually sign, as part of the 3115, a penalties of perjury statement that basically says that I did file the mark-to-market election by the appropriate deadline, and I am perfecting my mark-to-market election by filing this 3115. If that perjury statement is not part of that 3115, the IRS actually has to go and investigate further to prove, did you truly have that mark-to-market election filed? And remember, the burden of proof is on you as the taxpayer. It's not the IRS. So when they go back and they say, prove to me that you filed the mark-to-market election, well, I sent in my extension. Show me where you sent in your extension. Well, I mailed it in. Show me how you mailed it in. I don't have any proof. I just put a stamp on the envelope and sent it in. Not a good answer. You need to send something in certified mail, return receipt, a copy of what you sent in with the election statement. Hence the reason why, if you truly did send that in, you should have no issue signing that penalties of perjury statement. And with that, I've been told that the IRS will process the 3115 appropriately and not address any issues with having to go and look it up themselves.
And the certified mail just means you filed an extension, doesn't mean you attached it. And you can't e-file the extension with the attachment because it doesn't really go with the e-file extension, so you got to do it by paper. And if you're late with your Form 3115, the IRS can bounce you, but we did get some relief a little bit on that, Darren, when you spoke to them. There are some people that are getting a little relief on the lateness of the 3115. No guarantees, but the election statement is paramount. So if you have any interest in 475 people on the call, and I know TradeLog gives information about it as well because it's a key feature of the software, there's a lot of nuances to it, and we're the leading firm on that. Back to you, Jason. I know you're running late now, Jason, too.
That's okay, and we got some people staying with us, and if you guys can stay with us a little bit, we have a few more questions.
Good.
Here's one I know the answer to, but maybe you guys can comment on this. Do we actually have to provide the Form 8949 to the IRS, or can we just put available upon request if it's many pages?
No, it's a no. You know, in 2005, I took some heat for this. In 2005, the IRS made a big stink with a clarification saying, you know, there's industry practice out there to say details available on request. And years ago, we did that too. You would just have on Schedule D, details available on request. Now on the Form 8949, details available on request. Let the IRS request it. They made a big stink about it, saying that's never been allowed in the instructions, and we're no longer accepting that industry practice. And we had several clients that tried to still do it. They weren't clients of us at the time. They came to us afterwards, and they had a tax notice. They got audited over it. And when I told people about this, I said, you really have to do the attached line-by-line reporting. That's the whole thing about securities. It's line-by-line reporting. It's not like futures, which is mark-to-market in 1256, is a one-page 1099. It's aggregate profit or loss. It's easy. Securities is line-by-line reporting on Form 4797-2, on Form 8949-2. And if you don't attach it, I think there's a good chance you'll get a tax notice. Right, Darren?
Agree completely. And just the funny thing about that particular question is when the whole cost reporting actually came out, the question came up and we addressed it to the IRS. They said, well, if the brokers are actually now required to issue a 1099-B and report the cost basis, report the wash sales, and report the gain or loss, aren't they in actuality reporting everything on the 8949? So why do we have to attach that? Could you imagine if that's all you relied on based on the issues that we're seeing this year? There's no way that you're ever going to be able to just assume that. You're going to need TradeLog. You're going to need TradeLog because it produces the 8949 that you can either import into your software or either send it in as part of your tax return. There's no way you're going to be able to rely on that broker information.
Well, like we always said all along, Darren, the broker information is apples and oranges, and it's only going from 20% reporting to 45% reporting this year. Even after it phases in fully, it may only be 80% reporting for people. Unless it's 100% reporting with apples and apples, it will never be something that traders can use, and that means the enterprise software that drives it too. So you have to attach the reports. And when I went out on the message boards in 2005 and said, hey, the IRS just said this, you got to attach the attachment, one guy said, oh, no, you don't. Bob's just trying to sell TradeLog. We never try to sell anything. We just don't. We want you to file a correct tax return to get every benefit you're entitled to. We want to be your CPA firm for your lifetime, for 10 years, 20 years. We have a 30-year anniversary next year. We're in it for the long term. All we care about is your tax health, your tax prosperity. We don't sell anything. We happen to get a small commission on TradeLog, and the only reason we sell it is because it's the only software that our CPAs will sign off on. So we have to use it. And we want to get the message out to people. It makes their life easier. What are you going to... It's impossible to go to an accountant and have them figure out the accounting for you, and it would cost thousands of dollars. So you have to follow the rules. It's unfortunate. We don't like these tax laws. No one does. They're an abomination, but it's part of us as America. That's the way the American spirit is. All this give and take, negotiations, carrots, sticks. It's who we are, and we've built it up. Hopefully they'll reform it. It's going to be reformed next year, hopefully, and traders should come out okay, and we'll have separate webinars on that. So Anyway, long answer to the question, Jason. Back to you.
Well, that's good. We could get a little background on that. So, yeah, the answer is no. You need to send the form, but as Bob and Darren just explained, the days are long gone when you could put C attached. Before I ask the next question, a comment. I've had several people mention about that their broker is going to be sending them a new 1099 by April 15th. Some of you still haven't even received your 1099-B. So again, that goes back to what we talked about earlier. Your priority right now needs to be on filing that extension, because if there are a good number of people we are hearing that from that are not getting their 1099s until April 15th. We may see revised 1099s after April 15th. So if that's your situation, definitely make that a priority on that filing the extension. And here's a question as well. Maybe Bob, you might be able to answer this. Sarah asked a good question. She said she is launching herself as a trading business, but she hasn't actually traded with real money. Is she able to start off with a mark-to-market election? Is that even possible?
Yes, it is. If you think you're going to qualify this year and you don't yet, it's sort of like applying to graduate school before you graduate undergrad. So you're not a business trader yet. You didn't graduate into that, but you're getting your application in for the mark-to-market accounting by April 17th. And it may even be better to just start off with an entity. And then you have an internal election for mark-to-market accounting under the new taxpayer exception. You file the election in your own books and records, send yourself an email, within 75 days of inception of the new trading business. The paper trading doesn't count. You need the actual live trades every day to qualify. Back to you, Jason.
I've had several questions about futures and index options. Bob, Darren, can you guys comment on what's different with futures and index options as far as filing taxes on those?
You know, one of the other things that we're very well known for is how to get the lower 60/40 tax rates wherever possible, defending those breaks. In the New York Times, Andrew Ross Sorkin interviewed me across from Warren Buffett. Warren Buffett threw 60/40 tax breaks under the bus. I defended them. That's a separate discussion. We show you how indexes are 1256, 60/40, how options on indexes are futures, options on futures. We make a case for ETF options, most of them. We make a case for Forex when you make a capital gains opt-out election. A lot of people get confused about what is a security versus what is Section 1256 that gets the lower 60/40 rates. That's a 12% lower rate on the highest rate. Highest ordinary rate is 35%. The highest 60/40 rate is 23%. That's 12% less, almost 1/3 off. It's very meaningful. You don't need trader tax status for that. You don't need elections except with the Forex to opt into it. So if you can get that, it makes a world of difference in tax savings. And TradeLog is really good about recognizing what symbol goes in which category. And Darren, do you want to add to that?
Yeah, TradeLog does do a good job with that, and I'd suggest that you look directly at our website where we have the detail on what the options on ETFs, how they may potentially qualify as Section 1256.
Jason, could you show our tax center, by the way, Jason? The Trader Tax Center is under the spotlight.
Yeah,
left.
spot where he's going to show you.
On the left side, left. Go down a little bit, Jason. Right there, click that. No, the trader, that box. Right, click that. And if you click securities, number 3. Yeah, there's ETFs, there's securities, there's futures. Darren's mentioning the ETFs now. Thank you, Jason.
This right here, if you refer back to it, will give you the detail as far as the reasoning for actually taking a position that your options on ETFs, certain ETFs, should qualify for Section 1256. And as Bob mentioned, there's tax savings that you're potentially leaving on the table if you don't take that position. So if you are actively trading these types of instruments, refer to our site and also let us know, and we'll have a consultation with you to go into detail about it.
Yeah, and I saw a couple other questions too about ETFs, ETNs. This is a great resource. I know I often refer people to this when they ask our support department questions. Bob's got some great information here about ETFs, tax treatment, the regulatory issues with that. So definitely check out this tax center here on GreenTraderTax. Something too, I had a couple of questions. People are talking about if they want to get help from you guys at GreenTraderTax, what's the process? What do they need to do to start off and to get some professional help?
Jason, maybe you could just hit the home button up top for a second there. Up top, yeah. And right on the middle there, you see services. People often go, if you scroll down, they go to the consulting, they sign up for tax prep. Go down further, they sign up for the guides. There's a tremendous amount of free information, and then they just hit the Contact Us button, and they call the toll-free number. And what's unique about our company is that you're going to speak with Mindy Bartholomew. That's her photo with me at the trade show right there. Mindy has been here a long time. She knows all our CPAs really well. She knows all our services really well. She is not paid any commissions. She doesn't sell anything. All she wants to do is get the right information in your hands, to listen to your needs carefully, and then suggest what the next steps will be, and to make sure you're very comfortable with the whole process. She's kind of the quarterback. She's my boss. She sets up my schedule. She gets you the access to me. She's the one you speak to about customer service issues. Her job is to keep people very happy with us, and which we work hard to do, and our testimonials say that. So just call that that toll-free number, or send us an email at info@Green Company. And for investment management, we have a whole separate core area, practice area for that as well, if you manage money for others.
Excellent. Yeah, and I know a couple people have asked about, well, how much do you charge? How much is it going to cost to do these elections? And of course, it's going to vary. So, like Bob just mentioned, give a call, talk to Mindy, and I'm sure she can help direct you from there.
Well, Jason, the basic service is a 30-minute consultation with me for $150. And I just focus in on a laser on your needs. I make notes. I can send you a memo. Darren gets a copy of it. When you're passed to Darren for tax prep, you can apply that consultation payment to the entity formation service. So much gets done. Everything we discussed today is all going to be addressed and done within that half-hour consultation. And it's with me. I do that because it's very important that I frame all the big picture and the small picture with you. So when I pass you to Darren for tax prep, Darren gets a good start. And then Darren, tell him how you work with him on tax prep, and even now, last minute.
Yeah, even now we're still taking on new clients, so we welcome anyone that wants to join us. We would need to prepare an extension for you, which we're recommending as part of this presentation anyway because of the issues, but basically sign up for our tax preparation service. Then we send you an information request. It's a pretty inclusive list, but we want to make sure we get all your relevant information. We give you access to our share file server. You have your own user ID and password to our share file server for your folder where you can upload the data. We don't feel it's appropriate to send personal information with tax ID numbers, Social Security numbers via email. So you can upload it to our very secure share file folder. And then anytime you upload any documents to there, we automatically get notifications of it, so we know that you've uploaded the information. We download that information, and then we use that information to prepare your tax return. So there's to help you with the April 17th deadline, we don't necessarily need all of that information. We need more or less just a walk through, speak with you on the phone, get some general information just to see if you're in a refund or a tax liability situation for April 17th. We'll get the extension file. Then between April 17th and October 15th, we'll actually take more time, go through it with you, see whether you did or did not qualify for trader status, see if there's any other deductions. We always go back, we look at your prior two, we at least look at the prior two tax returns to see if there's any potential reasoning for a refund. Maybe there's some savings, and usually we can identify that. So we appreciate the opportunity to have you become a client of our firm.
And I know with online meetings, it's nice, Darren, because people can actually look at what you're doing on their file. You could look at their computers. There's online video. It's very personal, and people are really happy with our service.
Yeah, we are a virtual firm. We have clients all over the U.S. and we have some outside of the U.S. as well. But don't let that be a burden. Some people say, I'm used to traditionally meeting with someone face-to-face. We can still do that. We can do that now with the beauty of technology, video conferencing, using GoToMeeting, GoToWebinar. We can still give you that personal touch if that's what's holding you back. Don't let that be an issue. You actually have more direct response with us. You send an email, it comes directly to my inbox. I directly respond to you. You have my direct phone number. You call me. I speak with you. There's not all this traditional routing around. I've been told that our response time is a lot better than traditional accounting firms just because of the fact we are technology-based.
And brokers are used to working with you.
I'm sorry, Bob, I was going to say, for those of you who realize that TradeLog is something that you need, it definitely is an invaluable tool like we've talked about. If it's something that you feel like you don't want to fool with, don't have the time to fool with, I can certainly do that for you from start to finish. I can do the downloading, importing, and reconciling for you. Obviously, we're in a time crunch now with only a few weeks left before April 15th, so it'd be difficult to do a lot of new jobs and complete those at this time. However, focus on filing your extensions. Get your, if you know you have a loss and you're not marked to market, and you know you have a big loss, then you can file that extension knowing if you're over the $3,000, you can make a pretty good estimate that that's what you're going to do. If you have marked to market, then you'll have a general idea of what you made or lost because you can see your starting balance at the beginning of the year versus your ending balance. You know that you've made any kind of withdrawals, deposits, transfers. You'll have a pretty good idea that you can use to help estimate what your, to help support your estimates in making your extension. And then those of you, though, that are not marked to market but do have maybe large wash sales or have gains that you need to deal with, those are the ones we need to try to get in as soon as possible with TradeLog to help you more with your extensions. But other than that, TradeLog is going to be invaluable when you actually file your return because, like we said, you've got to do line to line whether you're marked to market or not, and TradeLog can support all those issues. So.
Thank you, Johnny Padgett, and I know you're standing by to help people at Green NFH on that, so that's great.
All right, great, guys. I want to hit a couple of questions. I've seen a couple questions. I just want to address this. So people have asked about e-filing, using TurboTax, using Tax Act. A couple of pieces of information people want to be aware of. Of course, if you are filing your taxes with a tax software program like TurboTax or Tax Act, in our Quick Start Guide and our user guides, we provide some basic instructions. You can find that under Step 8 of our Quick Start Guide for filing your taxes. But here's a caution. We provide some general instructions. We've used these steps, and they work for some basic users. But again, sometimes there's some complex situations that you might have, and these software programs are made for the general public. So we have people that have called and said, well, I can't import my data into TurboTax, or I can't use TurboTax. That's very well possible. We can't guarantee that those programs are going to work for you. Now, a couple of people have asked about, can you e-file and send 8949? That is allowed. There's an IRS Form 8453, which allows you to send the 8949 as an attachment to the IRS and still e-file. So those options are available. But again, these are tools that are designed for the general masses of Americans, and they don't always work for active traders. And so we provide some basic instructions. If it's not working for you, you can contact us at TradeLog, but sometimes you just can't use these types of tools for complex trader taxes. So I wanted to make sure and address that. There have been a couple of questions about that. Before we end here, we're going to have to end here in just a few minutes. Bob, Darren, maybe you can address 2 more questions about MTM. First of all, what is the purpose of the 3115 form? What do people need to accomplish? They've elected MTM. Now what do they need to do with the 3115?
Go ahead, Darren.
Well, the electing of mark-to-market by April 15th of each given year is only the first of 3 steps to properly elect mark-to-market. The second is you have to actually calculate the 481 adjustment, which is part of what TradeLog does an excellent job of. That's basically taking any open positions that you had at the beginning of the year that you elected mark-to-market and in essence marking them to market. The third and most important piece is the actual filing of Form 3115. That is the official application for change of accounting method that the IRS requires you to file with the National Office of the IRS in Washington, D.C., and also attach it to your federal 2011 tax return. Since that's the year we're filing right now, you have to attach it to that return. If you don't necessarily file that, there's some issues of your mark-to-market election may or may not have been perfected. If you properly made the election by April 15th of the year that you wanted it in place, that's step 1. That's the most important step, but you still have to complete the process by filing the 3115 with the National Office of the IRS. The electing of mark-to-market is an automatic change, meaning the IRS, as long as you properly elect it, will allow it. But in order to perfect it, you actually have to send in the 3115 with the IRS. It's the formal process that the revenue procedure as issued by the IRS says that you have to follow.
And Jason, maybe you could show our guides on the homepage, because if people use TradeLog, they need our guides. If they want to try to use TurboTax, they absolutely need our guides. If you scroll down under products, right there, right under products, they can right on their guides, click that. We have our examples guides, and Darren's got all sorts of example tax returns in there if you scroll down. And in the securities examples guide, we have the 3115 all filled out for you. It's very complex, a lot of code sections. You just have to print it out, put in your name and social security number, and your 481A adjustment. So check out our guides. It's the first stop. It's very important to use these. If you're going to do trader tax status, you need footnotes, Schedule C, income transfer strategies, very tricky, unlock a lot of additional breaks. We didn't get into that today. That has to be on the 8949 too. People have a hard time doing the trader tax return with the trading business on their own. So look at the guides, and you'll probably see you need more help, but start with the guides. And you can scroll back up again a little, Jason. They can see the packages.
Yeah, I was going to say there's some great packages on here as well, so definitely check this out. One more question here for you guys. A couple of people have asked, is it too late to elect mark-to-market for 2011?
Yes.
There you have it.
What you want to not be too late is for 2012. And a lot of people are going to get so lost in the forest, they're going to miss this key decision. And that's the one takeaway from today is file an extension and see whether you want to attach the mark-to-market accounting election to it or not. That's what you need to get done right. and it should be a valid extension. And TradeLog is going to tell you the numbers to pay what taxes you owe. There are no excuses. If you have TradeLog, there will be other clients that maybe can say, my 1099 was crazy. I didn't know what I had to owe the IRS. I didn't know I had a lot of gains in wash sales. And maybe they can get an abatement from the strict penalties that apply. But don't take chances with that. It's better to be conservative with the cash and aggressive with the returns. An extension is like having tomorrow's newspaper with the stock moves today. So you have a lot more information after the fact. They've always been the wise move. Sophisticated taxpayers, rich taxpayers, always file extensions. The early bird won't get the worm, they'll get audited. That's just a good note to finish up on, Jason.
That's right. Excellent.
Well, by the way, you'll see everything we discussed today is about avoiding audits, avoiding notices. They're very painful. We don't enjoy them either. We're great at dealing with the IRS. Anyone who ever has a problem here related to cost basis, we're the firm for you. We win. Look at our record. We know how to deal with the IRS. We're tough and polite. But we don't want you to go through that. Go ahead, Jason.
Excellent. Just before we finish up here, just to recap a few things for everyone. Of course, you do want to check out the GreenTraderTax website. Make sure and check out those blogs. And I'm going to be sending an email to everyone later this afternoon, so watch your email box. We'll have some links to these blogs. And very importantly, we're going to have a link to that petition, to petition for help for some relief from the IRS. So be checking your email box this afternoon and make sure and do that so we can get that movement going. Several people have asked some questions about 1099 differences. If you are having a difference in your 1099, you're having reconciliation issues, you can send us your files to TradeLog, to our support department. Send your 1099 along with your TradeLog file. That way we can take a look. What we'll do is we will check to make sure that you put the right numbers in the right places in TradeLog, and then from there we can point you onto what you need to consider next. Sometimes you didn't reconcile just because you entered something incorrectly. Other times there are legitimate problems with the 1099-B, and so we can point you from there on your next steps. But send us those files if you have those questions, and we can definitely help you out. We're going to have to end our broadcast today. Thank you, Bob. Thank you, Darren and Johnny, for joining us today. This has been great. I know we have some other questions that are still coming through. If you didn't get your question answered, I'll be sending you an email with some information to help you out with your question, or you can send that to our support department as well, and we'll try to answer that. But Darren, Bob, Johnny, thank you guys so much for joining us today, and we look forward to the next time we'll be able to have a webinar together.
Thanks, Jason.
Thank you, Jason. Thanks, everyone, for coming.
Thanks. Have a great afternoon, folks.